Dornbush download number 97, Andrew Michael again.
Yeah, morning, Andrew. Yes.
Good morning. I don't. Is it just because it's a shallow gene pool, or we just need sort of Heather to do the pan around the room to sort of, if there was a cricket sort of sound, we could just insert it here, because it's a bit quiet here. Dornbush Partners, staff-wise, but certainly business-wise, it's humming along at the moment, isn't it? It's just. How amazing, 2 weeks ago, Heather comes in, does this sort of emergency Brexit thing for us. Everyone's running around with their hair on fire. Fast forward 2 weeks, FOMO is alive and well, the fear of missing out, and it's just... Can you pick it?
Yeah, I was just going to say that very thing, Andrew. All the fear and, distraught caused around the UK exit from the European Union is a distant and far memory now. We've certainly heard in the last couple of days the political system now seemingly stabilising with Theresa May coming in basically.
Not Theresa Green, Theresa May.
As of tonight. So, of course, albeit we've had a bit of a whinge about our political system here, it's nothing compared to what the guys in the UK have gone through in the last month or so. But yes, Andrew, markets across the board, of course, central banks doing pretty much everything they can to keep things rolling along.
Printing money and
whatever. So, and I guess too, we saw US earnings season, so the US, report every quarter, so a bit more regularly than us, and Alcoa, which is always first cab off the mark, had a good, printed some good numbers, so, US markets, were pretty strong on the back of that, plus the stimulus going around.
And I think the other thing, Michael, if we're talking US markets, is that jobs data that came out last Friday. I think we were looking for like 60,000 new jobs created, 287,000 new jobs created. So this fear that the US economy is slowing, I mean, again, the data is patchy, but that was a huge beat. Like nearly 5 times expectation. So we're sort of almost getting into, dare I say, Goldilocks, where it's not too hot, not too cold. Interest rates seem to be okay. I'm talking overseas. Interest rates seem to be okay. Lots of jobs still being created, decent economic data coming out, decent corporate earnings. But as we've seen, flick a switch, spin a dime, and it can all just come straight back down again. So certainly from an Australian point of view, we are being quite circumspect. I mean, we're enjoying the rally, good stuff. And again, we had a lot of buying at Brexit time, so those clients are doing okay. Macquarie Bank is one that immediately comes to mind. It's up nearly 10% already. But coming into profit reporting season next month here in Australia, what are your thoughts?
Oh, look, Andrew, there's no doubt going to be, misses. And Commonwealth Bank, is one of the first that come to mind. Of course, our index itself very heavily weighted into financials, so Commonwealth Bank will be the benchmark, no doubt about it. Certainly concern around banking reports, net interest margins, dividend yields, all of that sort of thing will no doubt be thrown on the table. In the mining sector, there's certainly talk of some potential upgrades, based on, a pretty good rally in some of those commodities over the last 6
South 32,
months.
we've seen had a nice little kick there. Western areas up 10% this morning.
Yeah, absolutely. So, but as you know, Andrew, it's all about expectation. It'll just depend upon whether we've underestimated or overestimated. So there'll be a few left field, but certainly I think if we can bank on anything, it's going to be bouncy. But there'll be opportunities.
Technical term for those playing at home, bouncy.
But there's always opportunities in those sorts of scenarios as well. So,
and Michael, we had an update for one of the companies that you're following around Certex.
Yeah, Certex. Yeah, it's been we've spoken about Certex, I think, a few times on the download before. It's been a bit of a sleeper. Yeah, it's been a bit of a sleeper. It hasn't really done a great deal, but it did come out with some good revenue figures there the other day. So I think revenue growth for the year was about 16%, 19% in the Americas, which is a great sign. So Certex is one that we could continue to see a bit of a roll into. I see they're down a bit this morning after a couple of days of good gains after that announcement. But Certex, SRX, one to keep an eye on. Not a great dividend payer, but you're not buying it for dividend, you're buying it for share price growth. And very quick refresher, of course, yeah, they're the spheres, the microspheres, where they inject these tiny little spheres into livers predominantly, but they're looking at other organs as well.
Kidney, colorectal, and if they can get those happening, that's where the next wave of growth will come from. And it's been clinically proven to prolong people's lives. It's not a cure, but prolongs people's lives by between 3 and 6 months. So, you get the bad news, terrible, but it gives you extra time to get your affairs in order, spend time with your family, etc. And their growth, as you're saying, has been sort of 16-20%.
Yeah, absolutely. And that's it. And because it's, that selected internal radiation, it's not stuff that they have to pump through your whole body. It targets the area. And, my understanding is that the people actually suffering and that are getting a treatment have a bit easier ride along the way, as far as, not needing to get their bodies pumped full of poison. Pretty awful stuff.
And I guess the key thing why it's been so volatile, and you referenced the Americas, is they actually had their CEO for the Americas resign abruptly. And markets don't like that. Markets like clear, consistent succession plan. Now, there's 80 years of collective experience in that US team, so it's not like they are leaderless, but in the context of experience. But I think there's just been a few, some great data coming out, but there's just been a couple of things up from an uncertainty point of view which has been leading to that volatility. But certainly Certex is one of our preferred players, in particular simply because from the offshore income and that falling Aussie dollar. Michael, anything else you wanted to cover up?
No, that's about it, Andrew. A bit of data coming out of China at the end of this week. So GDP, industrial production. So some big news coming out of there. So that might stir things up a bit. But hopefully, we get the wave of good economic news sort of continuing to roll on.
And last thing, no change in interest rates. It was last week, wasn't it? Sorry, it's all blur at the moment. But certainly if the inflation data in early August comes out fairly low, then there's a really high probability that we're going to see another interest rate cut, which should again also be supportive for share market. So in summary, 2 weeks on, Brexit. What was Brexit?
Brexit, what?
See you next week.
Thank you.